Hi, everyone. Welcome to KYC, Know Your Counterparty, hosted by PM Insights. I'm your host, Nicholas Fusco with PM Insights, and I'm joined by Bryce Emo. How are you? How are you, Bryce?
Great. Thanks for inviting me on the show, Nick. Wonderful to be here.
Great stuff. Well, the show is all about, at least for this go around, getting to know our counterparties, getting to know broker dealers, marketplaces that are active in the secondary market uh, for private companies stocks. So, would love you to just do a quick intro of who you are and what you represent.
Sure, yeah. My name is Bryce Emo. I am the founder of Sidecar Finance, which is a marketing brand. We are registered reps, brokers. We're affiliated with Emerson Equity, LLC, and we help people buy and sell shares of private companies, generally unicorn. So it's companies that haven't gone public yet, largely tech, AI, B2B software, etc., aerospace that have not gone public or been sold yet, where people are looking to either gain access or they're looking for liquidity.
Right. So the key word there is yet, right? So I think we're going to have a ton of M&A activity in 2025, maybe some IPOs. I'm always a little hot and cold on that. Um, but I do always find this market so much more interesting than public markets. So would love to know a little bit about your background. Like, how did you find yourself in private markets? Were you a public markets person before, or has this kind of been derived from other prior private markets experience?
Sure. So I took a very non-traditional journey to get here. So just out of school, I worked for Merrill Lynch as a derivatives analyst for a couple of years, and then hopped off that train in 2000 when the internet was starting to just boom, right? And spent my career building and running sales organizations, mostly at media and big data companies. So ran sales at MySpace, the
Oh,
social
wow.
network back in the day, and then transitioned into the marketing technology side. So I ran sales at a company called Basis, filed to go public actually a couple years ago. Goldman Sachs was taking them out, put that on hold, given the market kind of climate and other factors like that. And then did the same thing at a company called 4C, which was a marketing partner to Facebook, Twitter, LinkedIn, Pinterest, Instagram, Snapchat, etc. A couple $1 billion in media spend through that platform on an annual basis, SaaS, etc. We sold that a couple years ago to MediaOcean. So I spent my career, going to companies, spending 2 to 4 years building and running sales organizations, and then when I'd leave, I'd have to either purchase my shares or my options rather, and pay tax, or let them expire. And so I was an informal study on the secondary markets for the better part of a decade, I felt.
Well,
And
I'm
about
hopeful you weren't letting too many of those expire, which is tricky. I mean, early in your career, when someone asks you to stump up six figures to buy out some options that you're not 100% sure on the exit strategy of, that's pretty tricky, right?
Yes, and unfortunately, I did have to let some of those expire, uh, and was only in one of those companies. I was only able to buy about half of it. I could have purchased more, but I felt like a couple $100,000 as an investment in a private company. This almost 10 years ago now, that still hasn't had a liquidity event was enough risk, but
Right.
it's very possible that I'll end up regretting that decision because they'd very much be in the money, at least theoretically right now. So, I switched over to the private markets. The co-founder of MySpace, one of them, a guy named Josh, he started a fund called Quid, which does limited recourse advances, what have you. And so he asked me to come on board, given that I had a good understanding for technology, had some background in finance. I ran sales there for a few years.
Right.
And what I found was I really loved speaking with executives at these private companies who were in the same position I'd been in. Many of them I was speaking with didn't have a great handle for their equity and how it functioned. ISOs versus NSOs, preferred versus common shares, early exercise of shares, vesting schedules, etc. And so I wanted to, even at Quid, I took a very education forward approach and wanted to be able to do that more broadly and help people who were executives at companies look across the aisle at selling shares, taking advances, waiting for company tenders, waiting for IPO, et cetera, and show them the various partners in the various categories, right? Rather than just say, hey, if you want to sell, here's the price. And
Right.
so we've taken a very education focused approach to the marketplace in helping people understand one, their equity, how it functions, two, what the marketplace looks like and the various players that are available to them.
Right. It
So,
becomes more of a strategic conversation than anything else in that case. And I really applaud you on the education approach because even just from what we do on the data side, we find the same thing. And we just put up a post today on LinkedIn that was, hey, the price of Anduril is not the last round at 14, it's already 20. It's not been that long,
yeah,
but you have to educate people on new technology, new possibility, new approaches to liquidity, because I absolutely hear where you're coming from that you wouldn't just say, oh, is this company going to IPO, yes or no, in what
right,
time
right.
horizon? There are a lot of other things I can do. So I I think that's a really nice way in, and I think that's hopefully you tell us. But was that a welcome phone call from most of those execs?
Yes, I think
Yeah.
we weren't always the first person to speak with an executive, and it's kind of like art. If you want to recognize good art, you got to look a lot of art. If you want to recognize a good broker in this space, you need to speak with a lot of brokers and understand their various approaches. And when we did speak with them, and as we have over the course of the last 3 years, as registered reps at Emerson, they've been super appreciative for the patient, highly communicative, education focused, soft sell approach that we've taken to those relationships. And what it's led to is very strong word of mouth marketing within these circles of employees and
Right.
circles of investors who say, hey, have you met the folks over, have you met Bryce, Son, Vlad, Caitlin over at Sidecar and Emerson Equity? And so that's what you're really looking for, right? Is in order for businesses in these cottage industries to become successful, you really need strong word of mouth, and it's the ultimate compliment.
Right. And those clients that work for the larger growth stage private companies, is that your core client base, or how far does it extend? What are the different client types that you service?
Sure. So there's a couple of cohorts. One is certainly existing employees and ex-employees of companies that are worth more than $1 billion, so unicorn companies. That said, there are companies that are worth 300 or 500 or $700 million that are growing fast, that are in hot categories where there are investors who want to get involved, and those employees, have the right to do it in many cases. And so that's one cohort for sure. And that's kind of how we started, was focused on shareholders, but what ended up happening was investors found out that we had access to executives, right, who were looking to sell decent sized blocks of shares. And rather than go through a broker to get to us as a broker, etc., they've started to reach out, and they've had great experiences. These investors, venture capital firms, family offices, super angels, very wealthy individuals, high net worth folks, etc., qualified purchasers, credit investors who want access to these markets have either found us through other investors, or even wealth advisors. So wealth advisors have, at times brought us clients and said, hey, these folks want access to the private companies and secondary market. Can you help them? And so
Right.
we're starting to do more and more education for those groups as well on the secondary market.
Yeah, and I think that's great because so many investors will go through their RAA, their wealth advisor, to get access, and then be told no potentially, and then that's the end of the conversation. So if it's not no any longer, and someone could then reach out to you and have you as the conduit into that frontier, I think that's fantastic. And also what you're saying of not all brokers are exactly the same, and certain teams facilitate the transaction quite differently. I mean, that's part of the reason why we do this show, to get the different
Right.
styles, to get the different takes of who focuses on what. And then you brought up something interesting. Most folks that we speak to gravitate towards those unicorn companies, which you guys absolutely have the access to. But you mentioned there are others that are like 300 million or 400, 500 million in size that you also take note of or also have existing relationships with. The general trend we've seen in the market is that the focus went in 2020, then 2021 to really like, oh, everything is in play. To 2022, 2023, the focus is narrowed, and now it's starting to just widen out a little bit more. So people do care about something other than SpaceX and Onderdrill and ByteDance, but would love to know what you're seeing, in the area 1 billion or just above, just below.
Right.
Is that an area that you think is going to pick up for activity, as opposed to just going for the the decacorns or above?
I do. You know, more broadly, we track, conversations with venture capital firms, family offices, what have you. In 2023, we saw about 75 companies where there were buyers.
Right.
This past year, the number swelled to 140, 150, right? So we're seeing a much broader breadth of investor interest across the continuum. Yes, 40 to 50 billion dollar companies or 100 billion dollar companies, but certainly companies that are worth 800 million to a billion five. And then those companies that were worth 2 billion or 3 billion in 2023 that might be trading now at 800 million or $1 billion
Correct.
because of theoretically, irrational exuberance that happened in 2020, 2021. The valuations, the multiples got so high, you started to see the public markets pull back. And certainly the pendulum swung even harder and probably, wider, to a greater degree in the private markets. So yes, we're absolutely seeing a broader group of companies that are of interest to investors, and we expect that to grow because if you think about venture capitalists, they're buying companies oftentimes that they want to have, that they expect to have 10x returns. That's just kind of the moniker of venture capital. Oh, we're looking for 10x returns, what have you, right? So in order to do that, it's hard to buy a company for $100 billion and think it's going to go to $1 trillion. There's very few $1 trillion companies out there. And so, not to say that it can't, but you do see people looking at companies, in the single digit, $1 billion, probably with that mindset.
Right. And you brought up just a quick reference to the companies that have pulled back. So maybe they were unicorns, know that they're no longer unicorns. And some of them have taken a reset, taken a down round, and some of them have not. Curious on your thoughts there. If they've made it this far into 2024, now 2025, without having taken it, what do you think the play is there? Do they try to hold out as long as possible so that it's softened, or they need money? It's been a couple of years. Very curious if you're expecting to see down rounds in the next 6 months for
Well,
some of
I,
these
I
big ones.
think one of the things we have seen, there's a dance that's going on between, venture capitalists and these companies for sure. And you're seeing people raise capital, and sometimes it might be at the same valuation as the round in 2020, but there's a couple things to keep in mind. One, they've had 4 years to grow into those valuations, so the multiples have actually contracted just naturally, right? There's been revenue growth. Two is sometimes there's preferences to those
Right.
warrants, what have you, convertible notes, and so it's there's ways to for the venture capitalists to get involved and have better economics rather than flying a flag, I feel, and saying, hey, company's worth 3 billion, now it's worth $1 billion, because clearly that's super, you know, it's not great press for the company and very hard in the secondary markets. And when you have companies that are taking down rounds, it is harder to find investors many times,
Right.
because think that investor, that venture capitalist, has to go sell their LPs why they are buying oftentimes common shares, maybe pref, right? but it's late round pref and a company who now has a really heavy kind of pref stack, and they're going to have to see significant growth in order to realize return on their investment.
Right. You're making me put my old like structured products hat back on, because we've actually seen a number of those that are flat. It's been a long time that's operated in between, but then if you don't have the details, you don't know how convoluted the most recent round is to make sure that
Yes.
that the new investor is quite happy to get involved, because they probably should have been priced lower, but you know what? There's probably some debt that goes along with it, like the warrants or a little bit better of a liquidation preference, things like that. So yeah,
There,
things to
there
be
certainly
made
can
aware of
be.
for sure.
And there are groups that are raising small rounds at that same valuation, right?
Right.
So maybe the last round was 400 million, but this time they're raising 40 million. So it's it's not, if someone's willing to put $400 million into a company, theoretically they're far more bullish on it than if that same group is putting 40 million in.
Right.
But they
And
probably need enough cash to keep the lights on, see a little bit more growth, hopefully wish for a better economy, lower interest rates, what have you, where they can raise at better multiples.
right. And I think that's a great point too, because when all's said and done, yeah, a $400 million print versus a 40, very different. In terms of the confidence that you'd apply to that, maybe for use in a NAV for a fund, or really just understanding the valuation of the company itself. But this is where we start to see the volume of secondary activity has picked up so substantially that you could actually see more volume occurring in between rounds than actually occurs in the round, because of folks like yourself,
That's
right?
exactly right.
So I think that, along coupled with the recency of how frequently that those data points come in, so bids, offers, trades, is all really, really important. And the momentum we've seen from last year to this year, we're up about 26% on the PM50 growth. Already starting 2025 off decently well, but would love to ask kind of, where do you think things are going to go this quarter or the first half of 2025? We love to ask, is it up? Is it down? Is it
Yeah.
sideways? What are you thinking?
You almost have to look at it by sector, right? So if you're talking about AI, you know, I have people that are looking to invest in some of these AI companies just because they realize, in order to make the bet on AI as one of the biggest companies in the private market, you have to raise 10, 20, 30, 40 billion dollars, which means the valuation of the company eventually has to be theoretically 2, 3, 400 billion. And that's actually what they're betting on. They're just betting on the company
That's wild.
having to raise a bunch of capital.
They
Therefore,
have
the
the
valuation
ability to
will,
raise this much money,
it's
therefore it's worth the next factor of that, right?
right. So it's, which clearly, decreases competition theoretically and creates some, there's some rarefied air there. So I think, AI, it feels like full steam ahead right now. It's continuing on a monthly basis. We're seeing prints beyond what we thought, and valuations aren't going up by like 3%. It's like 30, 50, 100 is what we're seeing in some cases. And so that certainly is shocking. And, I would expect for it to continue for a bit longer, at least. I expect to see these companies that we talked about that maybe have been selling at a premium, or I'm sorry, at a discount to where they were maybe in 2022.
Right.
I think they're continuing to get more quarters of growth. I think that they're going to continue to plug away and continue to increase in value the across the marketplace, so long as those companies are having good growth, right?
Right.
But
So
I think
this is
that
the
they've been
concept of,
submerged by a lack of buyers
right.
for a long time, and some of these companies are showing buoyancy, and they're continuing to. I'm hearing from my clients, really positive reports on how their companies are growing. So I do think you'll see kind of that core group of companies that have been trading at discount but still trading. Like, that's one of the things we look at is, are these companies still trading even though they're trading at a discount? It's interesting to see companies where there's still investor interest on a quarterly basis, because folks have stayed bullish on them.
Right. And with those, the ones that continue to get action, like your Discords or your Epic Games, things of that nature, and then you continue to see some revenue growth, albeit maybe not at the same growth as before.
Sure.
You are getting that concept of growing into the multiples, but also a declining multiple over a very, very long period of time. Because again, like when you introduce this asset class, let's say if someone is watching this, uh, that hasn't invested into uh, non-public equity, right?
Right.
They kind of want to get the sense of comfort that they can use a lot of the techniques they've used to assess companies that are public.
Right.
And one of them is going to be, okay, how can I compare the valuation of this private company to the valuation of a public company? How can I compare the volatility? How can I compare a revenue multiple? What does the sector look like? Are we outperforming the sector, or how are we looking? So, I mean, I think the longer we see some of these firms stay private, it's almost like the more information we're able to garner with them,
Yeah.
and you could draw that connective line. Or there's a bit of connective tissue between the IPO and what's happened before. Like Service Titan, we're kind of seeing that as
Right.
well now that that's IPO'd.
And I would say one thing to be careful of, right, is when the public markets sell off, the private markets follow suit. In terms of a lack of, what we've observed is that not that they necessarily sell off, but that buyers pause. And as we know, when the buy side is pausing and the sellers still think they can sell, there can create more downward pressure on the stock, or at least it's harder for the price to oftentimes improve over the periods of those times. So what we find is it does take, when the markets sell off, the public markets, buyers oftentimes get a little bit quiet, or they bottom feed, right? They move their prices down. These are just market dynamics. And then as the public markets come back, we'll have executives or shareholders come to us and say, cool, the market's up this week. Are the buyers back? It oftentimes takes a month, a couple months for those buyers to feel firm that they know where the market is. And then
But
you've also got buyers that leverage those public markets selling off or multiple contraction. They leverage that as a reason to buy as cheaply as they can in the secondary
that's
markets.
where I was headed. Like, there's opportunity there,
Yeah.
because yeah, you can start to understand that the private markets do act in their own way with some volatility akin to public, albeit with a lag, and it's not perfect. It's not perfectly correlated, but it does exist. So let's say that we want to take advantage of that opportunity, and we want to talk to you about buying or selling. What is the best way to get a hold of you? Website, email, like how do we find you?
Yep. So you can go to sidecarfinance.com is our marketing website. You can send me an email, Bryce at sidecarfinance.com, SIDECARFINANCE.com. And I'd love to speak with you.
Yeah, that'd be great. Well, it's been great speaking with you today, and yeah, hopefully you see the benefits of a good, strong 2025 as we've already started. All right, thank you so much, Bryce.
Thanks, Nick.